Hello, I'm Angeline Ong and welcome to Beat the Street, the show that gives you all the tradable news ahead of the Wall Street Open. Coming up, inflation watch. Investors are braced for that US inflation data for any clues as to how interest rates are going to progress in the US in the months ahead. Plus, American Airlines shares slide after poor earnings in July. There's yet another warning today. And Apple dips. Shares of Apple fall. It unveiled faster chips at its event, but iPhone prices remained unchanged. Just some breaking news crossing this very minute. Those core CPI numbers, which we have been waiting on for you, and the markets have been braced for this all week. The actual number, 0.3%. We were looking out for 0.2%, so slightly higher than initially thought. That's a month-on-month figure. How about the year-on-year figure? Well, for August, we got 4.3%. That was bang in line with expectations. Of course, all this is going to be key to whether or not we're going to see the Fed continue its higher for longer interest rate trajectory, and will affect the dot plot as well. Many analysts we've been speaking to in across the city and also Danske Bank are saying that the prices, the CPI, marks the final key data. This is why it's so important ahead of the September FOMC meeting as well. And while an unchanged rate decision is currently their base case scenario, the focus will be on the updated dot plots where a low inflation reading could push some participants to revert their June call for one more hike later in the year. Just wanting to take a look at the markets now to see if there's any reaction whatsoever. Starting with the volatility index, not much of a reaction there. Let's take a look at Wall Street. Looking currently at 34596, it's just slightly lower than where we were ahead of those numbers. Also, a similar picture for the US 500, and also let's check on the Tech 100 as well. Here is the Tech 100, US Tech 100, which mirrors the Nasdaq, currently at 15,215. It was at 15,304 ahead of that. Just wanted to also check on oil prices for you, because oil, as you know, has been a very volatile space. Crude there, 8860. Not much of a huge change there. Just let's take a look at Brent for you. Still holding above $90 a barrel. It's at 9206. Yesterday, the OPEC monthly report showed that global oil markets are facing a shortfall in supply of more than 3 million barrels a day next quarter, potentially the biggest deficit in more than a decade. This is as Saudi Arabia extends its production cuts. Also yesterday, API inventories unexpectedly rose. Crude oil inventories increased by 1.2 million barrels last week. Analysts anticipated a 2 million barrel drop. Gasoline and distillate stocks also rose by 4.2 million and 2.6 million respectively. Well, let's have a look at the Nasdaq now, because the Nasdaq has been quite volatile as well, given all the AI and the tech euphoria has somewhat come off the boil now. Ansel Rudolph has been taking a look at what the technicals tell us about where the Nasdaq is headed.
The Nasdaq 100 will probably be quite volatile, and the key technical levels to watch out for are last week's low here at 15,135. Provided we stay above there, we remain within an uptrend which we've seen since the end of August. But if we were to fall through 15,135 on a daily chart closing basis later today, the odds would favor a slide all the way back down again towards the uptrend line, which goes back to April of this year, and that can be seen around the 14,950 area. So that is a possibility if we were to fall through the 15,135 level from a technical perspective. So watch that space quite closely.
Looking at other shares on the move on IG or Sessions, American Airlines is one having issued a profit warning. Jeremy Naylor has more.
Yeah, this is for the third quarter, and it shows that we're in a situation where the markets are looking an awful lot darker than they were for American Airlines. There's a number of factors here at play. I just want to quickly run through the numbers just to show you what's been going on. It's downgraded that third quarter outlook. It sees now third quarter company earnings coming through between 20 and 30 cents for the third quarter. The prior forecast has been as much as 85 to 95 cents. Now, you may remember back in the July 20th release of second quarter figures, there was a general disappointment for investors. But it's really the same sort of thing, higher fuel costs and expenses related to its new collective bargaining agreement with the ALPA union. The company has been in talks with pilots and other unions that help run the airline. And they've come to this new agreement, and it's expected to be to the detriment of long-term earnings because of the sheer size of the deal. Let's take a look at the share price chart. You were saying, Angie, that we got a reaction on the IG platform. In fact, you can see quite clearly here the drop that we've got, which has come through. The vertical dotted line that I put on here, the long-term chart looks so we're not too far away from recent lows, but this vertical dotted line here is that date, the 20th of July, when American Airlines took the second half of the year on its chin, disappointing investors. All this is really weird coming through today because at that point it lifted its full year profit forecast and posted, in fact, higher quarterly earnings. It was just the outlook for the remainder of that current quarter. Some analysts at that point did suggest that any outcome of the negotiations, if they're detrimental to the share price with unions, then the stock will be negatively affected. And that is exactly what has come to pass. I want to show you some more detail about what's happening here. If I show you the 10-minute candles, you can see clearly here when this news was released, and indeed we've got another tick lower at the moment at 13.53. So let's take a look at where we are in terms of a trade on this. We know from the all sessions on the IG platform that it's going to open lower in today's session. The stock is currently down 4.25% on from the extended trade last night. So we are expecting a drop at the start of today's trade. So it will be one of those contributors to the downside that you were talking about, Angie, for the S&P 500 and where it trades. The stock will open at 13.56. Now, it's breaking this line at 13.55, which is the support we had back on the 24th of May. If you get a candle close below there, which yet could still come to pass, your next line of support is the drop that we saw all the way down 27th of April lows at 12.61. So all sessions on the IG platform, American Airlines on the way down on concerns about its third quarter profit outlook. So looking for a negative start on that stock at the beginning of today's session. Back to you.
Thanks, Jerry. We'll be keeping a close eye on American Airlines and indeed the other airlines too to see whether there's any spillover impact from this. Apple is another one we're watching out for, although this was more sort of like to do with yesterday's event. What is interesting is today we've had Morgan Stanley, Goldman Sachs, many of the big banks coming out with their own sort of comments on what they saw. Apple's reaction on the Goldman Sachs front, Goldman Sachs trimming Apple's price target to $216 from $222. Much of this, it says, is due to the fact that surprisingly, Apple kept the price of its latest range of iPhones unchanged. This also shocked the rest of the market, but also Goldman Sachs says it's trimming its EPS forecast for Apple for the full year 2024 to reflect a lower average selling price for the iPhone and a modest headwind to iPhone units in China. No surprise there, given what we've seen out of China recently to do with the iPhone restrictions for officials and for their work. Apple, though, just taking a look at the chart here, despite all that, is still up 35.7% so far this year. And the median price target, if I widen this out slightly, and you can see my range bar there, the median price target of 42 brokerages covering the stock is $200, a 13% upside to the stock's last close. And also checking in on Google, because this is also a very fast-moving area in terms of news for the company. Google coming out with comments against the US, saying that the US was wrong to say that Google had broken the law. The Department of Justice says that Alphabet's Google paid $10 billion a year This is allegedly to firms to keep its market share at around 90%. Now, of course, Google has said that this is not the case, but Google search engine is, of course, a key part of its business, driving advertising, sales, and other areas of profit for the world's fourth most valuable company. So this, of course, very strong allegations there. Also keeping an eye on an IPO in New York. This is to do with footwear, famous footwear, the Birkenstock. It's filing for an IPO in New York. According to Bloomberg, the German sandal maker is targeting a valuation of more than $8 billion. That's $8 billion. And Birkenstock is aiming to join the New York Stock Exchange early in October. In terms of its latest half-year report, the company showed revenues of 644 million, up 19%. Net profit, though, fell 45% to $40 million due to a sharp rise in operating costs. Well, is it the beginning of an IPO revival? Well, Birkenstock's majority owner, El Caterton, a private equity firm backed by LVMH, floated beauty firm Oddity Tech on the Nasdaq in July. And of course, there's also Arm Holdings. But if it is indeed a revival, it's so far happening outside of Europe, where IPO volumes are far below 2021's record levels. In the US, the value of listings have nearly doubled the amount secured last year. And finally, just wanting to check on the car industry for you, especially the EV space, because this is also in focus as we count down to the open. Just showing you NIO there, as you can see, and also Ford as well. I want to check on Ford for you because Ford, which is an all-session stock on the IG platform, is gaining traction on plans to double the production of its hybrid F-150 pickup truck in 2024. GM, also another one that we are checking on for you and watching closely. In terms of all sessions, let's just take a look at how it's doing on the hourly chart. Up around, no, actually it's now down a third. GM, UBS initiated coverage with a buy rating on its US listed shares of Chinese electric vehicle makers Li Auto, NIO, and also XPeng. So just showing you NIO there. These stocks could be on the move. They're currently, NIO is currently down slightly. XPeng, let's just take a look at that for you. These are the electric car contenders that are made out of China, of course. That's down ever so slightly. So we'll be keeping a close eye on any movement when the full market open happens not too long now. The European Commission has started an investigation on whether to impose tariffs on their vehicles. Now, before we go, let's have a last look at how the market is looking. As I mentioned earlier, that CPI figure is what everyone's looking out for. That's the dollar basket for you, 10,434. Not very much of a move there after that CPI figure. Let's take a look at Wall Street. This is the hourly chart, 34591 there. Also, not much of a move prior to that CPI figure. It was 34635. So wherever you are, do tune in for more analysis on @IGCom. And if you want to follow me or Jeremy Naylor, you can find us on Twitter as well. Until then, that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, as I mentioned earlier, follow us on @IGCom, and you can find me on @AngelineOng on Twitter. This is IGTV.